Welcome to my YouTube channel where I study the best investors from around the world. Today, we'll be looking at the sustainability status of agricultural-based technology platform called Pinduoduo. Enjoy this week's video. Pinduoduo Inc. is the largest agricultural-focused technology platform in China. It's a platform that connects farmers and distributors with consumers directly through its interactive shopping experience. Nearly 600,000 merchants sold farm produce through Pinduoduo in 2019. In 2020, Pinduoduo reported 788 million annual active buyers on its platform, compared to Alibaba's 779 million. This makes Pinduoduo one of the largest e-commerce companies in the world by active buyers. In this video, we will be analyzing Pinduoduo's stock and moving forward how sustainable the company growth is. Throughout 2020, Pinduoduo experienced hypergrowth in terms of both revenue and users. Pinduoduo's revenue increased 146% year over year to $4 billion in the fourth quarter of 2020. This makes Pinduoduo one of the fastest growing e-commerce companies in the world despite its large scale. As for user growth, Pinduoduo experienced strong momentum, adding an average of over 50 million annual active buyers for each quarter of 2020. However, as Pinduoduo approaches 800 million users, its runway for user growth is shrinking. As a result, user growth is expected to slow down in the coming quarters to sustain its high revenue growth. Pinduoduo will have to focus on increasing the average revenue per user, or ARPU, on its platform. To accomplish this, Pinduoduo management is focusing on engagement as the core of their strategy. They're prioritizing one area in particular, agriculture, and by extension, groceries. Pinduoduo's long-term goal is to sell 145 billion worth of agricultural products annually by 2025. It's progressing towards this goal with GMV, or gross merchandise volume, from agricultural products, doubling its more than 41.5 billion in 2020. In August 2020, Pinduoduo launched Duoduo Grocery. Its grocery pickup service helps local farmers and distributors to sell directly to consumers. Duoduo Grocery is one of Pinduoduo's main initiatives to increase its ARPU, so this business will be the focus of this video. Duoduo Grocery operates a third-party offering, meaning Pinduoduo generates revenue from transaction fees for the service provided to the merchants and farmers on the platform. Pinduoduo is approaching Duoduo Grocery as an integrated part of its e-commerce platform and is an extension of the experiences it can offer. The company's management believes that there will be strong synergies with Duoduo Grocery and Pinduoduo's platform, in the sense that Pinduoduo can fulfill users' needs that they previously weren't able to address. Duoduo Grocery caters to the rising demand that consumers have for convenient, affordable groceries, with the service available in 300 cities. Duoduo Grocery is expected to contribute to overall platform engagement, and as more users become more familiar with Pinduoduo's platform, spending is expected to increase as well. However, to successfully deliver fast and reliable grocery services, an agricultural-focused logistics infrastructure is needed. Management has acknowledged that it needs to become more asset-heavy, as groceries as an operations-heavy business. This is a major challenge for Pinduoduo, as other competitors, including Meituan, Alibaba, and JD.com, are also investing heavily into logistics infrastructure and operations to compete in the grocery industry. JD is a competitor to highlight because of their logistics expertise and move into groceries and group buying through Jinxi. Since JD operates a first-party logistics network, JD has more control in terms of both quality and efficiency over their logistics. This type of logistics model requires significant capital expenditures, which have served as a major barrier of entry. Meanwhile, Pinduoduo is working with third-party providers to make investments in warehousing operations and delivery logistics operations. Pinduoduo's goal is to be able to deliver groceries within 24 hours. Establishing this logistics infrastructure is also important for sourcing and forecasting. Determining how much to sell or at what price to sell products at depends on the ability to forecast customer demand accurately and then organizing the supply chain around these forecasts. If Pinduoduo can efficiently organize its delivery logistics and successfully forecast product demand, there are many opportunities to drive synergies between Pinduoduo's platform marketplace and Duoduo Grocery. Meanwhile, on the supply side, most of the Pinduoduo suppliers are local. With 12 million farmers on Pinduoduo who are sourcing and supplying to users, these farmers could all be potential sellers or suppliers for Total Grocery, provided that they have enough support around logistics and business intelligence coordination. Over time, this infrastructure could support not only local suppliers, but suppliers on a nationwide basis that can leverage the supply chain available to Pinduoduo's marketplace. This could extend beyond agricultural produce. Pinduoduo's vision is to become one of the world's largest agricultural producers, and by doing so become the largest grocer in the world. Since the development of logistics infrastructure will take time, management has stated that profitability won't be a target for them to set Pinduoduo Grocery as of now. The development of this logistics infrastructure will result in significant capital expenditures, which could pose a future risk due to Pinduoduo's current lack of profitability in their main business. In addition, management statements regarding the fact that they are not focused on profitability is also potentially concerning. Pinduoduo has historically used price subsidies to attract customers to their platform, meaning products sold on their platform are discounted significantly, sometimes even below cost, to encourage customer purchases. If Pinduoduo uses aggressive subsidies to attract users to Pinduoduo Grocery, this could result in more cash burn to an already unprofitable business. Another risk that Pinduoduo faces is its source of user acquisition. Pinduoduo acquires a large amount of its user base through WeChat, a messaging platform owned by Tencent. Pinduoduo has access to Tencent's 400 million daily active users on its WeChat mini programs. WeChat mini programs make it easy for users to access Pinduoduo's platform within WeChat, driving additional user traffic. However, it was recently reported that Alibaba's Taobao deals its social commerce platform with over 100 million monthly active users would be launching its own mini program on WeChat. Historically, Alibaba and Tencent have been major competitors and still are, but with new platform regulations introduced, this marks a major turning point in the relationship between the two companies. With Alibaba's platforms being introduced into the Tencent ecosystem, Pinduoduo faces another major competitor. In addition, a major question that investors have asked is whether Pinduoduo's users are loyal to the platform, or if they're only using the platform for discounted prices. Despite high gross margins, Pinduoduo is currently unprofitable due to its high sales and marketing expenses, which include price subsidies over time. Pinduoduo needs to reduce these sales and marketing expenses to generate net profits. However, this is highly contingent on users sticking with Pinduoduo without requiring significant price subsidies. It also appears that many of Pinduoduo's new users were attracted by the discounted prices on the platform instead of brand loyalty, with Pinduoduo's average order value, or AOV, decreasing 15% to 43.5 RMB in 2020 as compared to 51.1 RMB in 2019. However, average order per buyer increased 44% year over year, suggesting an increase in platform engagement moving forward. With Meituan, Alibaba, and JD.com operating in the same industry, this will be a highly competitive market. Another major announcement regarding Pinduoduo is that Colin Huang, the founder and chairman of Pinduoduo, will be stepping down from the board. This is less than 1 year from when Huang was CEO in July of 2020. The super voting rights attached to Huang shares will be removed after he officially steps down, entrusting the voter rights of these shares to the board. Meanwhile, Huang pledges these shares and another 3 years of lockup, meaning they won't be sold off. Huang stated that he will spend his time after Pinduoduo working on food sciences and life sciences. What's important to know is that as of Q4 2020, Li Chen, the current CEO and soon-to-be chairman of Pinduoduo, is the only member of the entire C-suite. Despite being a near $200 billion company, Pinduoduo has no CFO or COO at the company. Regarding stock price multiples, Pinduoduo trades at roughly 11 times 2021 sales. With a relatively high multiple compared to other e-commerce competitors, investors are betting counting on Pinduoduo to continue its high top-line growth as it expands its initiatives in agriculture and groceries. If Pinduoduo can successfully carve out a share of the market of these areas, then Pinduoduo could reach the high growth expectations of the market. However, if Pinduoduo fails to achieve these growth rates, then Pinduoduo could experience significant multiple contraction. Regarding the sustainability and profitability of Pinduoduo's growth, this will be heavily predicated on whether Pinduoduo can successfully retain users on the platform without the use of aggressive subsidies. The numbers that will come out in the coming years will paint a clearer picture of Pinduoduo's business strength or weaknesses. So do you think you make the investment in PDD, or is it just too early to tell? What companies or stocks would you like to see next? Let me know down in the comments below. I hope you enjoyed this week's company overview of Pinduoduo. Please like and share these videos and subscribe to my channel so that we can get updated with new weekly videos coming forward. Thanks again, and have a wonderful day.